ladies and gentlemen, will the Fed pivot on these rate hikes going forward? That is the question everybody wants to know. I've been MIA for very good reason. I caught a little bit of a cold that's been going around here in Vegas. I don't know if it's going on across the rest of the country, but oh wee. So I had caught the bug that everybody's been worried about the past couple of years. And let me tell you, I had that for like a day. It was gone, over, done, no big deal. Whatever this little common cold thing, like literally, I want to sneeze right now. Whatever this thing was, knocked me out. So I haven't really been putting up any content or even follow. I've still been following everything, but I just haven't been really working too much because it put me out. So yeah, don't catch that. Whatever that was, don't catch it. Wear a mask or something. I don't even know. Whatever you do for that. Take vitamins. Yeah, take vitamins. That as soon as I started taking those Trader Joe's shots, I started feeling better. You know, Trader Joe's has the ginger shots and the cherry one. Those work. So, little health health pointer for the day. So I want to get into what's going on. I actually was blessed and honored to be a contributor to Fortune magazine's latest article by Lance Lambert, who I'm a huge fan of. Lance Lambert. I've been following him for quite a while. He's very data and analysis driven. And he's had, you know, his finger on the pulse of the real estate market for quite a while now. And I always read his stuff. He's fantastic. So for him to ask me to be a part of his article and his magazine, I was just super excited. So I was happy to do it. So yeah, and it's, you know, the title of it, if you want to go look for it, but I'm going to put a link in the description, is "The Housing Market Activity is Crashing." And it threatens to push the US into a recession just like 1981 and 2008. So if you're searching for the article, that's it. There are some tidbits I'm going to get into a little later as we chat that I contributed to this article. And it has to do with real estate agents. But yeah, let's get into a little bit about what's going on in Las Vegas. Well, let's start with mortgage rates right now, which, you know, that's the number one thing that everybody is, you know, concerned about. 30-year fixed mortgage rate right now is at 7.37%. 15-year fixed is at 6.68%. 30-year FHA is at 7%, solid. 30-year jumbo is at 6.25%. And the 30-year VA is at 7% as well. So they're still high. Don't want to look at those. So yeah, let's get into a little bit of Las Vegas action and see what is up with that. You know, during my conversation with him, part of it was I was expecting median home prices to take a much quicker, harder fall. If being a guessing woman, that's what I was expecting. And so this past month when the numbers came in, I thought for sure it was going to be a lot lower, and it ended up leveling out with the month previous at 450,000. So I was a little surprised by that. And I'm assuming and this was me assuming the contributing factors, maybe luxury might have something to do with that, but mostly I think it's that we still have so many stagnant listings just sitting there not doing anything, and they're not moving, so they're not going through the cycle. So that's maybe why we're seeing that. And if anybody out there, because I know a ton of really intelligent people follow me, if you think there's any other contributions to that, please put it in the comments, and I would love to dig deeper into it, and maybe we could talk about it on another episode. So let's get into these Vegas numbers. Right now, active, single family, condo, townhouse, high rise. There's 11,334 homes on the market now. Compared to last year, there was about more or less 4,000. That's still such a large amount. 40 homes have closed between September 1st and October 1st. That's not a lot of closings. And that's just single family. Now, what I dug into a little bit because I was curious about those questions that I asked before, the stagnant homes that are sitting there. So I went through from April when I wanted to look at when these rate hikes started, and I went to April and I stopped it at September because now we're in October and let's put it there. There are 7,808 total homes still sitting on the market from April to September. Now let's break it down further, month by month. April, there are 168 homes that are still on the market that were listed in April. So you have 180 homes out there that have just been sitting there. Do they not want to sell it unless they get the price they want? I'm sure that has something to do with it. But there's deals to be had, especially for cash buyers. I know this isn't the time to be trying to work up some kind of you should buy. I'm not into that right now, and we'll get into that too. So April it was 168. May there is 485 active listings that have still been on the market since May, the month of May. June, it's 1,005. July, it's 1,413. August, 2021. And September, 2,716. So, yes, there are deals to be had, but I'm not on the team buy the dip. I'm not on the team buy the dip, okay? I have a feeling, this is just a personal opinion, so don't quote me on it. And I mean, you could quote me on it, but don't take this as financial advice. Don't take anything that I say as financial advice. Honestly, people who depend on realtors for their financial decisions, we get commission off you buying and selling. Like, listen, I happen to be one of the few that will tell you not to buy or sell if it's not in your best interest, but that's not always the case. So I always tell people, please speak with a financial advisor because, that's where you need to go. You need to speak with your family. You need to speak with a financial advisor. You need to speak with your accountant, CPA even. Those are the people you want to get in their ear. Don't just go to a real estate agent because, I see it a lot, every time's a good time to buy. Unfortunately, I think a lot of the people that are buying right now with these interest rates and these prices that are still considered high, they're probably going to get rid of those houses in 6 to 8 months. So yeah, there's always a time when people need to buy a home. Right now, there's people that need to buy a home, even considering. So it's our job as real estate agents to be able to navigate those situations that best suit our client. And so that's what I'm here for. I'm performing a social service in regard to that. And I think we need to keep it that, and not just thinking about commissions. But you can look at that in all sorts of different fields. You can look at it in politics and you can look at it all over. People are in it for themselves. And I think once we get back to social service, like true, honest social service, and really lift up those people who are in it for social service and not just trying to tell you to buy and sell all the time. I think we're gonna fix this. We're gonna be able to fix this industry, because right now this industry doesn't have the greatest of reputations. So let's get into it a little more. And so with the numbers that I just gave you, between May and September, there's 19 markets, and these are just a few that I'm going to name off, that saw home price declines over 5%. Okay. San Jose at 10.59%, Austin at 8.23%, San Francisco at 7.88%, Phoenix at 6.60%, and Salt Lake at 6.79. So that's between May and September, like we were talking about. We haven't gotten to that point yet here, but I think the clock's ticking. So like I said, buying the dip right now, I'm not your financial advisor. Home prices are still higher than they were a year ago, but the gains are shrinking at the fastest pace on record. I put that note in there just because I wanted to make sure I got that across. So a few other notes that I wanted to cover. The 10-year treasury is at 4.08. So yesterday was at 4.28%. And every time I come on here, my number one thing is watch the bond market, watch the yields, watch the bond, watch the 10-year yield. That's what you need to be looking at. It's going to tell you what's happening, what's going on, and where things are going if you know how to read it. And it's not that hard to read. If it's going up, it's not good. If it's going down, we're going to be okay. It's that simple. So when you see it right now, it's volatile. It went down a little bit, but we're still over 4. So it's nothing to be, jumping up and getting excited about. I think what we saw was the Fed buying a bunch of mortgage-backed securities, and it shifted it a little. So it does remain volatile. The Fed is losing billions, wiping out profit that funded the spending. I took some notes here. The Federal Reserve is starting to realize that inflation is a larger black hole than previously thought, and a pivot or a pause in rate hikes could lead to stock rallying at the end of the year. So yeah, and that's what this article. So the first sentence in the article, I'm going to read it to you because it goes along with that. Lance, said the go-to line from analysts and economics alike is that the Fed will push until something breaks. Okay, sorry, I'm not quite there yet. I'm like coughing up a storm, so I'm having to edit. So I cough, and it's a whole thing. I'll be back. I'll be better next week. See what I mean? Okay. So credit card debt is at an all-time high at $930 billion per the Federal Reserve. So they're the ones informing us of this. That is just wild. Okay, so Pulte came out and they said buyers are walking away from pretty sizable earnest money. They just aren't confident in making the purchase. We haven't seen a noticeable change in reasons why people are canceling. Been consistent. So, Ali Wolf on Twitter posted, I had a builder tell me recently that baby boomer shoppers were more willing to walk away from deposits. They said that they were walking away from $40,000, $50,000, and even $80,000 deposits just because they'd rather lose that money than buy at what they perceived to be a bad time. And just so you know, in Vegas terms, the new home cancellation rate in Las Vegas is 35%. So new homes are pretty interesting right now. Put it this way, they're not putting up, the lot premiums are coming down, and they're not putting those lots on bids. You're not going to have to fight with anybody for a bid anymore on those. And they're actually giving real estate agents commissions again. So that's nice, because for a little while they weren't. And we like it when our new build communities support realtors. Speaking of realtors, part of my Fortune magazine contribution was I talked a little bit about what's going on here as far as realtors go. You know, we're feeling the heat for sure. Behind closed doors, we're all saying the same thing for the most part. Like, it's slow, it's slow. I'm the one. I'm going to be honest and open. I'm not going to walk around and act like I'm balling right now. Like, it's just not happening. Like, I keep it 100 all the time. It is slow, okay? It is very slow, and the struggle is real. It probably doesn't help that I'm one of the ones that says maybe now is not the best time to buy, but that's okay. That's the what do you call it? The cross I have to bear. But at the end of the day, like, my father taught me integrity over everything. So I'm going to stick with that. Yeah. So I called the GLVAR and I asked them what was going on over there because I was a little curious. And they said, normally they bring in about 300 new agents in. They sign in 300 new agents a month, back to January. And now she's seeing it's 120 new agents coming in, and she's going through 30 withdrawals a day. 30 withdrawals a day, and that means they're losing 30 agents a day in Las Vegas. The last posted number before, and this was before our recent dues that went through, was at 17,500. Tomorrow we get the new numbers on what they are. I imagine they're not going to be that much different. I don't think it's going to be a huge drop off, but I think that the big one that we pay at the beginning of the year is going to be a real telltale sign of what's going on in the industry. We're losing realtors, we're losing lenders, we're losing a lot of people in the field. They're falling off, so finding new work. Excuse me. So that's what's going on right now. I wanted to give a little update. I'm alive. I'm breathing, kind of. Keep having to cut out to cough. But yeah, so keeping you appraised. I'm going to put the link to our article in the description, and I'm going to go get something to drink. Love you guys.